Hi, you're listening to Market Matters, our market series here on JP Morgan's Making Sense podcast. My name is Emma Johnson, an Executive Director in the EMEA Custody Product team within JP Morgan Security Services. And I'm pleased to be joined by Jack Parker, an Executive Director in JP Morgan's US Custody Product, and Sahil Shah, an Executive Director in our APAC Custody Product team. Welcome, Jack and Sahil.
Thanks for having me, Emma.
Pleasure to be here, Emma.
Today, we're talking about accelerated settlement in global securities markets. This episode is part one of a two-part series and is focused on the recent move from trade date plus 2-day settlement to trade date plus 1-day settlement in the US and some of the neighbouring markets, plus some of the lessons the industry has learned from that move. And part two, which will be released in the coming week, will focus on accelerated settlement initiatives in Europe and APAC markets. So Jack, let's start with you. Now, you're a member of the US T+1 Industry Steering Group, as well as chair of the Association of Global Custodians Working Group for US T+1. If you could just level set and outline why the US moved to T+1 settlement and why other markets are looking to do the same.
Absolutely. So markets globally have been gradually accelerating settlement over a number of years, with the US pre its move to T+1 in May, moving from a T3 settlement market to T2 settlement back in 2017. I think underpinning rationale for sort of accelerated settlement generally has been the desire to reduce build-up of credit, operational and counterparty risk between the point of trade execution and settlement. So I think the discussion in the US and neighbouring markets like Canada moved to T+1 really because in 2020 and 2021, there was sort of volatility off the back of events such as the COVID outbreak and some of the meme stock events as well around that time.
Great, thanks, Jack. Thanks for setting the scene. So we're now some 4 to 5 months post the US migration to T+1. Can you just tell us how it's going so far?
The industry transitioned into business as usual off the back of the go live in May pretty quickly, to be honest. I'd say one of the key areas of focus or areas of success is the affirmation rate, which is a big focus of the initiative and at an industry level. This has been consistently higher than 90% since go live. I think the other area of focus was obviously the settlement rate. And again, the settlement rate has remained high since go live with no major spikes in fails as some predicted. I think really this is a testament to the significant focus across the region on T+1, particularly from our clients, also the general custody industry and the broker industry, and then also from DTCC and then the trade associations involved, such as SIFMA and the ICI.
That's great, Jack. Very interesting. So with the UK and the EU and certain markets in Asia Pacific exploring accelerated settlements, what would you say have been the major lessons learned?
Probably the first lesson is making sure you're engaged early in the industry and regulatory discussions. So from a JP Morgan perspective, in the US, we were engaged in the industry working groups and reg discussions from the start. What this enabled us to do was better understand the issues, also build up knowledge within the organisation, and then also help with our early budget planning. And I'd recommend that clients do the same for the UK, Europe, and any initiatives in Asia Pacific. Secondly, a market change this size required early establishment of a robust execution program with formal guardrails in place. Again, this is something that we at JP Morgan did and would recommend our clients do the same for other T1 initiatives as they go live across the globe. Another important point is that in the US, it took 3 to 4 years to actually go through this in the industry and implement it. And I think UK, European and Asia Pacific policymakers should recognise that. Related to that, and related to the UK and EU and Swiss policymakers in particular, the US, Canada, Mexico, as well as other markets like Argentina, Peru and Jamaica, they all moved to T+1 at the same time because of the interlinkages between those markets. And I think, again, European policymakers need to think about that with interlinked markets in the European region. And lastly, I'd like to highlight the important role that SIFMA and the ICI Command Centre played in the transition in the US. I think that command centre that they set up for Go Live Week was important for information sharing across the industry and also for engagement with the regulators over the transition week. Again, I think that's something that other trade associations globally should look to model as other T1 initiatives transition to go live.
Brilliant. Thank you so much, Jack. Now, Sahil, I'd like to bring you into the conversation now, please. Could you maybe talk about how the US transition to T+1 went from an Asia-Pacific perspective? I would imagine that time zone played a key part in your region.
So the high-level answer across the industry would be along the lines of it has gone as planned, it has gone smoothly, so far so good. As with any major market change, there is a lot of preparation, focus, and attention to all of these aspects, which undoubtedly help us with a successful transition. The key factor which was front and center for our clients in APAC was timing of trade affirmation. While all other clients globally had to work within a truncated window, this was critical for the APAC clients as they had the least amount of time to allocate, confirm, and affirm trades for T+1 settlement due to the time zone difference from where they operate. This was also further amplified for clients that are operating within a single Asian time zone operational hub versus clients that can leverage global follow-the-sun operational capabilities. The other key point was funding and FX timelines. Certain APAC clients who execute their own FX trade had to pull the FX process forward to now execute at the time of order placement with some margin or buffer in place to deal with minor differences. And on the other end, I'm also hearing of APAC clients who have moved their FX execution desk into the US or are working through the US time zone. Overall, I believe the clients have adapted well to the change, and we will continue to evolve processes and operations as we move towards more markets moving to T+1 and this becoming a business as usual stage.
Thank you, Sahil, for those insights. Very interesting. And thank you both for your time. We look forward to discussing accelerated settlement in APAC and EMEA in part 2.
Thanks so much for having us.
Thanks for having us, and we look forward to continuing this conversation.
Thanks for listening to Market Matters. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, Google Podcasts, and YouTube. This podcast is intended for institutional clients only. The views expressed in this podcast may not necessarily reflect the views of JP Morgan Chase & Co. and its affiliates, together JP Morgan, and do not constitute research or recommendation advice or an offer or a solicitation to buy or sell any security or financial instrument. Referenced products and services in this podcast may not be suitable for you and may not be available in all jurisdictions. JP Morgan may make markets and trade as principal in securities and other asset classes and financial products that may have been discussed. For additional disclaimers and regulatory disclosures, please visit www.jpmorgan.com/disclosures. Copyright 2024 JP Morgan Chase & Company. All rights reserved.